Hello everyone, and welcome to this presentation of Forex trading strategies that work. Hello and welcome once again. My name is Steven Primo. I am the president and founder of Specialist Trading, and I see we have a fairly new crowd here. So for those of you who aren't familiar with my website, Specialist Trading, first and foremost, is an educational company. We try to empower all of our students with the knowledge and everything I've learned about trading and methods and different techniques in my 37-year career of trading virtually all of the markets. Once again, my name is Steven Primo. A little bit of background about myself. I've been trading once again for 37 years. My background is in stocks, hence we get the name Specialist Trading. I was a specialist on the floor of the Pacific Stock Exchange for 9 years. I was actually on the floor for 16, and 9 of those years I was a specialist. So even though my background is in stocks, after I left the floor in the mid-90s, I traded just about every market and different technique around trading the E-minis, the Forex markets, and stocks as well. I continued to trade to manage money, and around 6 or 7 years ago, I started Specialist Trading, where I just teach my own techniques, the techniques that I personally use in my own trading, and I try to empower all of my students with all the things that have worked for me, that have gotten me on that road to consistency. Now, I feel the Forex markets are really one of the most underused markets and most misunderstood. A lot of traders really don't understand how they work. They think they're a little bit different, but they're really very simple and very easy. And once you see how I'm going to show you how these techniques can be applied, you'll see how consistent they are. But before we begin, as always, we are required to show you our disclaimer, so please take a moment to view our disclaimer. I'm going to show you a lot of performance results in 2 specific strategies for trading the Forex markets, but please remember that we can in no way guarantee that any of these results I'm about to show you will be repeated in the future. So once again, as you're taking a moment to view our disclaimer, I'd also like to mention to a lot of the new people that are new to my presentations, I like to take my questions at the very end so as we don't slow down the class. So please, if you have any questions, please write them down and try to remember them, and we'll get to them in the very last 10 or 15 minutes of the presentation. This won't be a real long webinar, probably about a half an hour or so, but I'll give you a lot of great information, some stuff that you can start using as early as tomorrow as you'd like. But if you happen to have any questions, please write them down. The most common question is this being recorded? Yes, this is. As you see underneath the chat box and to your right, there should be an email address as well as a phone number. You can contact. If you have to leave earlier, you can request a link to the recording of this presentation if you have to leave early or if you just can't stay for the entire presentation. So there's lots of ways to ask questions. Once again, if you just joined us, keep your questions till the very end. That way we won't slow down the presentation. Another thing I want to mention is that we are now on Twitter. We give a lot of free information on there. We gave some really nice signal postings in the Forex markets in this past week, a long signal in the Australian dollar. That worked out very well. In fact, we were up over 100 pips in the following day. So we give a lot of free information. We don't tell you exactly where to get in or where to get out because that's just for our students of Specialist Trading. But if you'd like to follow us in the signals and different information we give, you can check out our name here. It says at Specialist Trading, at SPCLST-TRADG, abbreviated here, on Twitter. And you can follow us each and every day. All right, now, as I stated, we are an educational company first. Now, why are we more concerned with education as, opposed to just blindly giving you signals to follow and telling you what trades to take? Well, because contrary to what a lot of people believe, I had a very difficult time when I first started trading on the floor. I know a lot of people think, well, if you're on the floor, you should have a license to steal. You're just making money hand over fist. It's not true. I really could not seem to get my trading going forward. I would have, 5 or 6 trades where I'd make money and then I'd give it all back. So my trading was really inconsistent. So I had a very difficult time, and I'm sure a lot of you are probably going through that same type of process yourself, regardless of which market you trade. Okay, so I know where you are. I've been there before. I had a few mentors that were also traders on the floor. These were specialists as well who were able to turn my way of thinking around that got me on that road to consistency. Right? And so the same things that they shared with me on the floor can be applied to virtually any market, either the E-mini markets or the Forex markets. And they're all about keeping things as simple as possible. So even though we provide all of our members and all of our students with signals and strategies, the way I'm going to be showing you today, we're more about teaching you these things so that you can empower yourself, so that ultimately you don't have to rely on an outside source, such as a trading room, or relying on what news event is going to come out, or relying on what indicator, you're just going to be able to see these nice setups and decide for yourself how you want to trade them. All right? We basically give you the nice format of very high probability entries. And then we design the strategy to meet and fit your needs so that you can either trade conservatively or aggressively. So my goal is to teach you how to trade with the specialist edge. This is the same edge that was taught to me that got my trading on that road to consistency, and this is what we want to do with everyone else. Now, even though I'm going to show you a lot of statistics today and figures, we're really not about that. We're more about teaching you. So we're just showing you just real world stats to show you how well they've performed these strategies. But we're really more interested in teaching you so that you won't have to rely on an outside source to make your decisions. We want you to make your own decisions in the trading world. All right, so what I'm going to do is share two of our most consistent strategies, and these are actually strategies that belong in our Elite Forex Trading College. All right, our college comes with upwards of 10 specific different trading strategies and different techniques and money management techniques. I'm going to share with you two of our specific strategies today, but when I say share, I can't give you the rules. That wouldn't be fair to people who have purchased this through the college. But what I'm going to do in one of our most consistent strategies, I'm going to give you actually two of the rules and show you an actual setup. So you can use this setup in any type of strategy. You can incorporate it, or you can actually build a strategy based off of this setup, because it's a very high probability setup, and its foundation is rooted in consistency. So I'm going to share that with you in one of our most consistent strategies. All right, so let's first of all talk about these strategy highlights we're going to be talking about today. And once again, if you happen to come in late, remember, I'll take questions at the very end. I won't even open up the question and answer box. So if you happen to write something in there, I'm not even going to see it until the very end when I open up that box. So kindly wait till the end to ask any questions. So let's talk about the Forex strategy highlights. First of all, with these strategies, you can apply to any time frame. The beauty is, even though they were designed on daily bars, and we're going to give you statistics going back roughly about 3.5, 4 years for these signals on daily bars, we have students that swear by that they work better on intraday bars, and they only use them for intraday trading. So you can virtually apply them to 15-minute bars, 4-hour bars, or even monthly bars if you'd like. Now, you can trade in any direction with these strategies. Some strategies are only for going long, some are only for going short. We virtually get signals in either direction as long as they meet our setup requirements. You can trade either conservatively or aggressively. Once again, we are an educational company. We are not a systematic company. And I know a lot of people will say, well, Steve, you have all these stats, so what is the win-loss ratio? What's the worst-case scenario? What is the, any type of statistic you can come up with. We're not about that, because there are 1,000,001 ways to trade these. One trader can trade the exact same strategy in an entirely different way as the other trader, and they can be entering at the same point. So there are 1,000,001 ways. Once again, we give you the foundation, and then we work with you. I work with you as your mentor, and fine-tune the strategy so that it meets your needs, either conservatively or aggressively. Because in my 37 years of trading, I've really learned that no one can mimic another trader and be successful. It really doesn't work that way. I know a lot of people go to trading rooms and get signals or subscribe to services and try to trade exactly what they do, and there's really no consistency in that, because everyone has a different temperament. Everyone has different risk alignment, and so there's no way that you're going to be able to have the same type of results. What we would rather do is format a strategy to meet your needs so that you feel comfortable pulling the trigger. So many times someone can generate a signal and they won't pull the trigger because the risk is too much for them, whereas another trader will take the trade. So there's really no one way or systematic way to trade, in our opinion. It's more of a strategy where a strategy is 70% rule-based and 30% open for discretion, discretion meaning your insight that you've learned in our courses. Now, you can also transfer these onto other markets. Now, even though they were designed for the Forex, we have, once again, students who use these on other markets. In fact, I even used one of the strategies I'm going to be showing you today on the E-mini the other day on a tick bar chart, and it had a profitable trade. So that's how well they can transfer over onto other markets, and as well as any time frame as well. And then lastly, we have real-world results. Once again, we are not a systematic company. We do not keep records on each and every time frame, on 10 minutes to hourly. We're only showing you the results on signals that were generated. In other words, signals that we gave to our members once they become members. Okay, and these are our most basic format of a strategy signal generated. All right, so let's start out with our first strategy. This is Forex strategy number 5. This is probably our premier strategy for trading the Forex because it's done so well and it's extremely simple. Let's give an overview of this particular strategy. It's designed to trade currency pairs overnight. Okay, so this was a strategy that was designed to hold the position overnight. Even though we have students who just traded on 10-minute bars and are very successful, the real design of this was to hold the position overnight and to get close to swing trading with this particular strategy. It's a candlestick pattern recognition strategy. So we're not looking at any volume, we're not looking at any indicators and numbers of indicators, we're not taking U's into account. We're only looking for this particular candlestick pattern, and I'll share that with you in just a few moments. Now, its intensity level of this strategy, if 1 is the most intense where you have to virtually watch every tick, or if 3 is the most relaxed where you just kind of have to walk away and enter your orders and you don't even have to look at it, it's a 3. It's extremely simple to use and extremely relaxing to trade. So it's a very, very low intense type of strategy. It has a proprietary money management factor so that if you want to trade this conservatively, you know exactly when to move your stop or where to place your stop. And we teach you all of this in the course. And then lastly, as we said, you can trade this in any direction, in any Forex market, and in any time frame if you like as well. Even though it's designed for overnight trading, it's really, it can be used in all of these different time frames and in any Forex market. Now, if we go back this past year, starting March 2013 and ending just last month, February 14th, you would have a 45% gain just based on a $50,000 trading account and trading 1 contract. All right, so you basically have $7,000 based on it. I'm sorry, make that $24,000 based on a $50,000 trading account. Now, we realize that that's a large account for some people, so you could, narrow it down to meet your needs. If you wanted to trade the mini lots, just simply, adjust accordingly down to that. You could trade 1 or 2 contracts with $5,000 or $10,000. Let me show you some of the statistics here. Remember, this is based just on our benchmark of a $50,000 trading account going back 1 full year from March of 2013 to February 14th. We had 45% gain using our standard, most basic version of this. Remember, there are 1,000,001 ways to trade this. We don't have statistics on all of those because we just couldn't keep track. We're more of an educational company than a statistic company. We just don't have the manpower or the time. But this is just a very standard way of trading this. If you'd like to trade this, you would have been up 45% in the past year, trading 1 contract, not compounding, not averaging up or down, just simply trading 1 contract per signal. Now, we would have had a total of 65 trades this past year. So that comes out to roughly about 5 trades a month or so, maybe 1 trade a week. Very, easy to implement, and your money is not tied up. That's the beauty of this. If you trade this on the daily bars, you're trading maybe once or twice a week at the very most, and most trades last roughly a full 5 days at most. So if you don't get a signal right off the bat, or if you're out of the signal in maybe 1 or 2 days, your money is not tied up. Out of the 65 trades, 57% were winners, 25% were losers, and 18% broke even using our standard, non-aggressive type of approach. Our net pips made in this past year were 2,265, which came out to roughly about $22,673, trading 1 contract, remember, once again. Our best month, which was last July, you would have made 655 pips, or roughly $6,667, okay? Our worst month, we lost 321 pips, or $32.33, all right? Now, the monthly average, remember, this is just an average. Going back this past year, you would have had roughly gains of 189 pips per month, or roughly close to $1,900 a month, trading 1 contract of the full lot. Remember, this is just the full lot. If you wanted to use this, you could use this using mini lots, trading 1 or 2 of the mini account. Our worst drawdown was 401 pips, or roughly about $4,000, close to $4,100. Remember, past performance is not indicative of future results. These examples are for educational purposes only, so always invest wisely. And this was based off a hypothetical $50,000 account, okay? And this was only going back this past year. If you wanted to go back since inception, since we started giving signals in September of 2010, well, our performance results now are you would have had gains of 176%. Now remember, this is based off a $50,000 account, trading one contract only, not compounding at all, okay? So past performance is not indicative of future results. These are for educational purposes only. All right, so let's talk about the setup. We're not going to just show you statistics here, and we can't give away the entire rules of this particular strategy. Once again, it wouldn't be fair for the people who actually have purchased this, but let's give you a portion of the setup. In fact, this is the real meat and potatoes of this particular strategy, and I'm going to share this with you. All right, so you may want to write this down. Once again, this is being recorded, so if you want to request the link to this recording afterwards, you can go over this and you can have this and look it over. But it's extremely, extremely simple. Remember, this is a strategy that's based off of a particular candlestick formation. All right, so here's what you need. Basically, we have about 5 rules to this strategy. I'm going to share with you 2 of these rules. First thing you need for a buy setup is price must be above the 50-period simple moving average. Okay, so we want to see the majority of price above the 50. And one thing that a lot of people are always concerned about, they say, well, Steve, well, what if we just, price is oscillating back and forth? How do we know if we're above the 50 or not? Well, if your entry bar closes above the 50, that will suffice. Okay, and I'll show you an example of that in just a few moments. So rule number 1 is we want to be above the 50-period simple moving average if we're going long. If price is below, we're not even going to consider going long. All right, so we'll never buy if price is below the 50-period simple moving average. And then secondly, we're looking for a bullish engulfing pattern. That's the pattern we're looking for. Now, I know a lot of people use this particular pattern, and in our opinion, they use it incorrectly, because they'll find a bullish engulfing pattern and they'll think, well, I've been taught that this means that most likely we're going to go higher. But because you're not in sync with the 50-period moving average, rule number 1, usually over time this pattern won't work out. So when you couple these 2 things together, when price is above the 50-period simple moving average and you find a bullish engulfing pattern above the 50-period simple moving average, well, you've just put the odds in your favor. You now have a really nice setup for a nice move in an upward direction. So I've just shared with you probably the meat and potatoes of strategy number 5. All right, we have about 3 other rules incorporated with this, but this is really the gist of this particular strategy. Now, I know some people aren't familiar with what a bullish engulfing pattern is, so let's just give a refresher course. A bullish engulfing pattern is a 2-bar pattern. All right, so if these are daily bars, you want to see that the first bar opens and closes lower. All right, this is called a dark body right here. In other words, we opened here and closed lower. The second day must open and close higher, but what you want to do is see the body totally engulfs the previous day's lower body. So we're not concerned with engulfing the extreme ranges from top to bottom. We're only concerned with this open and close range here, engulfing the open and close downward range here. So this gives you a high probability that you're most likely going to be going higher in the next 1 to 5 bars. Now, coupled with being above the 50-period simple moving average, well, now you really put the odds in your favor. So let's show you some older charts here just for educational purposes to show you how well this works. All right, here's an older chart of the euro-dollar. We see here that at this point, price crossed and closed above the 50-period simple moving average. And for the next 2 or 3 weeks, we are above the 50-period simple moving average, as you can see right here. So we have our first rule of our setup. Now we're looking for a bullish engulfing pattern, which we see right here. You see how this day, upward day, totally engulf this downward day. Remember, we're not at all concerned with engulfing the entire range from top to bottom. We're only concerned with engulfing the dark body here, or the lower day, the body of the candle. Once you have these 2 things in conjunction with each other, you have a very high probability setup for the market to continue in its upward course. That's how simple it is, okay? We don't rely on any news. We don't rely on any volume. We don't rely on a lot of other advanced, neural networks. We don't care about things like that. We're just keeping things simple. The way I was taught and the things that got me on the road to consistency, that's what we teach and mentor to our students. Now, what if you want to go short? Well, here are the setup rules to go short. And they're basically the same thing. We're just going to turn the rules upside down. Remember, this is the basic format of strategy number 5, and we're sharing this with you. Usually this is just reserved for our members who have purchased the course, but I want to share this with you, and you can actually apply this to your own trading, to some strategy that you currently are using, or you can build a strategy off these because they're really grounded in consistency. But please, if you do use these in the next day or so, paper trade first, just so that you understand the concept. First thing you want is you want to see price below the 50-period simple moving average. Remember, if price is below, we are not going to be buying. We're only going to be looking to go short. And then we want to see a bearish engulfing pattern. Okay? Now, bearish engulfing pattern is just the opposite of a bullish engulfing pattern. It's a 2-day pattern where the first day opens and closes higher. So we have this open body right here. But then the second day open and closes lower. And as you can see, its range of the body totally engulfs the upward range. All right? We're not concerned with engulfing from the very top to the very bottom. We're only concerned with engulfing this upward day open body. Once this happens, we have a high propensity for the direction to continue lower in the next 1 to 5 days. So we're even going to stack the odds in our favor even more if we are below the 50-period simple moving average. So once again, let's look at an older chart to give you an example of this just for educational purposes. And this is an intraday chart, a 60-minute chart of the Australian dollar. Coming into this example, we were above the 50-period simple moving average, but at this point right here where the red arrow is, we crossed below and closed consistently below. All right, so this means we're not even going to consider going long on an intraday basis, the Australian dollar. We are only going to be looking to go short. So our next step is we look for a bearish engulfing pattern, which is right there. You see how the second day's downward open to close range totally engulfed the first day's open to close upward range. So this is a very high probability setup that the Australian dollar will be going lower on an hourly time frame. And look what happened. Once again, it doesn't get any simpler than that. Trading does not have to be complicated. And you saw the statistics going back 1 year of how you would have been up 45% using basically just these rules along with 2 or 3 other ones. And that's it. But this is the basic framework of the strategy. So let's show you some recent trades. Okay, those were older trades just so that you can get a great picture for how it works. Let's show you some actual recent trades that our members were alerted to and that many of our Forex college members already took. This was just on the 17th, a month or two ago, in the British pound. First thing we see is that price is above the 50-period simple moving average. So this means we're only going to be looking to go long. We won't even consider shorting the British pound. Why? Because price is above. Now that we see the price is above, what are we looking for? We're looking for a bullish engulfing pattern right here. You see how the second day upward body totally engulfed the first day's downward body. So this is our setup, and look what happened. We quickly went up in the next week. We ran up roughly about 100 or 150 pips. That's simple. And this was an actual signal taken by our members. How about just about a month ago, actually, a month ago from today, this was in the Swiss franc. This is a daily chart. Now, this is what I wanted to mention earlier. A lot of students have trouble with this, usually in the beginning, because they say, well, Steve, we're oscillating back and forth. We're above, we're below, we're above. Remember, once you see a setup, as we see here, this is a bearish engulfing pattern, you ask yourselves, well, where did the second bar close, the second of the bar of the pattern? Well, we closed below. So this was an adequate and a valid signal to go short. Now, had we had this setup, but we closed above the 50 period, well, then it wouldn't be a valid setup. But since we closed below, this is a valid 2-bar setup to go short using the bearish engulfing pattern. And this was just a month ago, and look what happened after that. Okay? Remember, we're not concerned with what's going on worldwide or what's happening economically, because all of that is too subjective. In other words, we want things that are more cut and dry. A news event or a number, an economic number can come out, and one trader can see it and perceive it as being positive, whereas another trader will totally see it as being negative. We don't want to ever trade that way where something is not cut and dry. We want to know that we have a bearish or a bullish engulfing pattern. There's no way you can dispute it. It meets all of the requirements. One person is not going to say it's not an engulfing pattern because they're going to see the same thing. And then we want to see that if we're above or below, if we close above or below the 50 period. All right? If we're closing below, another trader cannot say that we're closing above. So we want things that are simple and cut and dry. We don't want to leave a lot of room open for interpretation, as some gurus will tell you on TV or in their trading rooms. We just want to have things cut and dry. The more complicated you make your trading, the less you're going to be on that road to consistency. When you simplify your trading, you're really opening the doors to consistency. That's what worked for me, and that's the way we teach our students. So this is really the basic of strategy number 5, the basic format of strategy number 5, and that's once again one of our strategies we talked about here. Let's move on to another strategy, strategy number 6. Let's give you a quick overview of this particular strategy. Well, this one now is designed to trade quick momentum moves, all right? So we're usually in this trade no more than a couple of days. Now, you can stay in the trade longer if you'd like. I mean, it's designed to get in and out rather quickly, but you can stay in this much longer if you'd like. We can be in trades for up to a month or two if you like, as long as the trend continues in your direction. It's just up to you. Remember, that's why we're not a systematic company where we don't trade the same way. Some traders will love to just stay in as long as they can. Other traders get in and out using this same strategy. It's an indicator-based strategy, whereas strategy number 5 looked at a particular candlestick pattern. Well, we're not concerned with a particular candlestick pattern. We're only looking at what an indicator is telling us. And this is, I can't give away what this indicator is, but all I can tell you is that it's not something we made up. It's not some neural network. It's your standard basic indicator that you'll find on just about any charting software package. Okay, it's intensity level, 1 being the most intense, 3 being the least. It's right in the middle of 2. So you have to give some room for attention on this. You have to actually have some time to actually watch this, but it's not the type of thing where you have to be glued in front of your computer at all times, okay? Remember, you can use this on any time frame, in any direction, and in any market. As I stated, I used this on the E-mini market on a tick chart the other day and had a really nice profit. Same exact rules, using everything the same way. Okay, so this can transfer over very easily. Now, if we go back this past year from March of 2013 to February, just last month, you would have been up 48% based on a $50,000 account, trading one contract. So basically, if you had $50,000, you now have, hypothetically, roughly close to $7,500. Or I'm sorry, I keep basing this off of a $15,000. $50,000, you'd have close to $25,000. Okay, see how nice that would have worked out for 1 year trading one contract. Now, obviously, we know a lot of people don't have $50,000 to trade with, so adjust accordingly to the mini contracts. You could, trade 1 or 2 of this and still have a nice nest egg or something to work with while trading this. Let's show you the statistics using a $50,000 account using, once again, the standard version of this. There are many ways to trade this. We're going to show you the basic, most standard version, trading one contract, not compounding, not adding on or trading ultra conservatively. We're just using the standard version. Now, we had a total of 82 trades going this past year, so a little bit more than strategy number 5, once again giving you 1 or 2 trades a week, whereas strategy number 5 would have you be in the trade a lot more, though. This is having you in and out very quickly if you like. Now, out of the 82 trades, 60% were winners this past year. 23% were losers, and 17% broke even. The total net pips using strategy number 6 this past year was 2,300, or close to $24,000. Our best month was in December this past year, 494 pips, or close to $4,900. Our worst month, we lost 7 pips, but because of the weighting of the different markets, Forex markets, we actually would have still made money, $300. So this is the beauty of this. We really didn't even have a losing month with strategy number 6 this past year, this past 12 months. The monthly average is 192 pips, or close to $2,000 per month, trading the large contract, and our worst drawdown was 361 pips, or roughly about $3,800. All right, remember, this is not indicative of future results. These examples are for educational purposes only. Now, if you wanted to, this is how we did the last 12 months. If you wanted to see how strategy number 6 did going back to September 2010 to February 14th, it's up 170%, 107% based on a $50,000 account and trading only one contract per signal. Okay. All right, so let's look at some recent trade examples. Remember, this is an indicator-based strategy. So the only thing I can share with you is that it uses the same format in terms of the 50-period simple moving average. In other words, with strategy number 6, you will never go short if price is above the 50-period simple moving average. So in this case, which was just a week or so ago, a couple of weeks ago, we see here in the euro-dollar that price was above the 50-period simple moving average. Now, we don't have the proprietary indicator shown, but with the setting that we show you how to set up with the proprietary setting, this generated a buy signal on the 27th. So had you taken that buy signal, look what would have happened. Now, most traders would have probably gotten out this very next day with close to a 100 pip gain. But if you wanted to stay in the trade, you could have stayed in much longer. Okay? You see how well it moves in your favor. Now, here's something I want to show you using the two strategies in conjunction with each other. As you recall, on the 13th, strategy number 5 had a bearish engulfing pattern right here and gave a signal to go short and did very well. Now, what you could do is use that signal for confirmation, because on the 27th, strategy number 6 gave a sell signal as well. So you have a signal within a signal. So had you missed this, or if you were in this using strategy number 5 and say you had enough money to purchase another contract using an entirely different strategy, you could have shorted again right here, and look what happened. So this is the beauty. As you see, we had a bearish engulfing pattern right here, and this isn't a bearish engulfing pattern at all. This is based off of an indicator setting that we show you how to set up. All right, so let's recap before we go to questions. Remember, with these strategies, you can apply to any time frame. Even though they're designed for overnight bars using daily bars, they can really be applied using 10-minute bars, 4-hour bars, or weekly bars. You can trade them in any direction, as you've just seen, long or short. You can transfer them over onto other markets. So you can trade them on the E-mini or on stocks as well. And you can trade them either conservatively or aggressively. Remember, I know a lot of you are going to say, well, what is the win-loss ratio? What's the worst drawdown? What's the best time frame to use? We only keep statistics on the signals that we generate on daily bars. We have no idea how it's working on a 10-minute bar, or how it works on a monthly bar, or going back 20 years. We don't believe in that hypothetical. We only keep track of signals that we've generated and issue out and post to our members. So those are the real-world results which we just shared with you, going back roughly to September of 2010. Now, I want to take a few moments to invite you all to become members of these two particular strategies. We have a special deal here where we have an actual combo, and the beauty of it is, as you see all these things listed in blue here, we have extra bonuses along with these particular strategies. Let me just share with you what you will get with these strategies. For a limited time, we send out alerts so that while you're learning how to format and how to actually apply these strategies, while you're learning the process, we give you signal alerts when they happen the night before. This was an actual signal alert that was sent out, an email sent out to all of our members prior to entry of this. On the 27th, if you recall, we showed you that strategy number 6 signal where we went long the euro dollar. Okay, so we tell you exactly where to enter, we tell you where to place your stop, and where to exit using our standard format. Remember, you don't have to follow these rules if you don't want to. You can use a more aggressive approach or a more conservative approach if you like, and we teach you this in the course. But this is what we issued out to all of our members, all right? And so you saw how well that trade worked out. This was on the 27th. You could have exited probably around right here for a nice quick, I believe it was a 90 pip gain or 95 pip gain, or you could have stayed in much longer and still been in the trade if you'd like. Now, just to show you once again how well these two strategies have performed, we have an equity chart looking at strategy number 5. This is when we started issuing signals just on daily bars. And you can see these are the results of real-world results, trading one contract based off of a $50,000 trading account. You see how well this strategy performed. And then we look at strategy number 6 going back to September of 2010, using a $15,000 hypothetical account, trading one contract. You see how well this would have performed. Please remember, though, that past performance is not indicative of future results. These examples are for educational purposes only. So as I stated, for the first time we're offering these two, our most consistent strategies. These are part of the Elite Trading College. We're giving you these in a specific combo together, these two proprietary strategies, plus the bonuses. All right, all the signal alerts, the full access to all the rules, access to my personal email, so you can contact me whenever you'd like, detailed instruction, entries, exits, and stops. These together would normally cost close to $1,400. What we're doing this is discounting this down by $400 roughly, down to $995. And we have payment plans available. You know that some of you may not be able to meet that right now, meet that payment. So we have payment plans available for everyone. They can meet all of your needs. We can structure them around so that you can make them available to meet your needs with your payments, okay? Remember, this also includes 1 year of trade signals, but this is for a limited time only while we're promoting this particular combo. So If you want to become a member, if you want to take your trading to the next level, if you'd like to get consistent, just as I showed you with these real-world results and these real-world examples, I invite you to become a member of Specialist Trading and become a member of these 2 specific courses. These actually are our most consistent courses in our Forex course. So for more information, you can go to our sister site, that is Pro Trader Strategies. They market and promote all of our individual strategies as well as our combos. You can go to their site at protraderstrategies.com, or you can contact one of our trading consultants at trading@protraderstrategies.com, or call us directly at area code 310-598-6677. Okay, now I want to thank you all for waiting. I see we have some questions, so I'm going to answer them right now, and I want to once again thank you. And the first question, as usual, is will this be recorded? And yes, it is. As you see there on the screen in front of you, kindly contact any one of our trading consultants, and they will send you the link to this recording. Carlos asks, if price is above a daily chart but below the 4-hour chart, the 50-period simple moving average, do you take the short? This is probably, Carlos, this is probably one of the most common questions we get. Basically what he's asking is if you are looking at 2 different time frames and you're using the higher time frame to give your confirmation of the lower time frame, using that 50-period simple moving average, do you take the trade? Now, I personally do not subscribe to this technique. I used to, once again, when I was trading on the floor, and all I found out was that this basically kept me out of a lot of trades. And so I would see that price was above the 50-hour the 50-period simple moving average on a daily time frame, but on the lower time frame it was below, so I didn't take the trade. And it turned out to be a great trade, and I missed it. So what I do personally is I just take the chart I'm trading and take the signals off that. So if I'm looking at an hourly bar or 4-hour bar, and if price is above or below, that's the only thing I'm concerned about. I'm not concerned with what the daily bar is doing. Okay, that just tends to complicate things, and it keeps me out of a lot of trades. Now, having said that, we have members of Specialist Trading, members of our Forex courses, that use that technique and say it helps them tremendously. So if you, once again, as an educational company, we're not saying you have to trade everything the same way. That's why we cannot keep statistics on each and every one of these, because there are a million and one ways to do it. So if you want to trade that way, that's fine. It's just been my experience that that will keep you out of a lot of good trades. So we don't say you have to have that, but there's no fault in using that if you'd like. Okay? I hope that answers your question. Let's see. Do you combine strategy number 5 and 6, or do you run them separately? This is a question from Tom. That's a good question, Tom. I personally would advise just using them separately, especially when you are trading, beginning to trade this. Only because you don't want to get, once again, bog yourself down and get too confused. Once you understand the process, if you're a new student, yes, I see no problem in using this, because you'll get different signals. And so, as I told you, strategy number 5 is based off of that bullish and bearish engulfing pattern. Okay, so what you want to do is look for that. Strategy number 6 has no bearing on a bullish engulfing pattern. It doesn't care if there's one there or not. So they're totally different signals. From time to time, you may get signals using on both strategies on the same particular bar. So that's even more of a confirmation that it's probably going to work out. In fact, I believe we had one of these a little while ago. I forget. I believe it was on the could have been on the Australian dollar. Yeah, but we had a really nice signal on the Australian dollar. I believe it could have been in conjunction using those. So in the beginning, I would say while you're learning, only stick with one strategy at a time, and then after that, sure, you can combine them. And also, once you learn both of these strategies, if you get signals on the same day, this is more of a confirmation that it's probably going to be working out. Okay. Yasser asks, is there anything about strategy number 4? Well, Yasser, strategy number 4 is another great strategy, but we wanted to keep the cost down, and we figured if you're going to be purchasing strategy 4, 5, and 6, you might as well just become a member of the college, because those are the gist of our main strategies. So we really just wanted to keep the cost down for a lot of people, so we only structured this combo around strategy 5 and 6. Strategy 4 is another great strategy. It's a great strategy, but we feel that because of limited funds for many traders, we didn't want to add another strategy, and so they couldn't make the cost. So we gave them these 2 that are really nice. But strategy 4 is a fantastic strategy as well. Okay, but if you're going to be purchasing 4, 5, and 6, you might as well just become a member of the college. Okay, and you can contact any one of our trading consultants. As I said, they will work with you for payment plans. They'll structure it around your particular funds and your needs, and as well, they'll try to work with you on that, as well as any discounts that we may have. Steve asked, is strategy number 6 based on the Harami? No, it's not. It's not. Strategy number 6 is based on an indicator. The Harami is not an indicator. It's a candlestick pattern, once again. Strategy 5 is based off a candlestick pattern. Strategy 6 is based off of an indicator. Okay. Rev asks, hi, Stephen, can this strategy be used on stocks? Yes, it can. All of these strategies can be used on stocks. In fact, I would say strategy number 5 probably works best on stocks. I've seen it work fantastic on a number of stocks. It's just that we have so many strategies for the stock market. We just don't want to inundate with another one, and so and we don't have the time or manpower, once again, to keep up numbers and statistics. But I've seen this work great. In fact, I've seen it works even better intraday trading stocks. So it works fine. And I just gave you 2 of the basic rules of strategy number 5, okay? It has roughly 5 or 6 rules in the strategy. So I gave you a good third of the strategy, and of all the rules, these are the most important. You could basically start just applying these to trading this intraday if you like, or trading these on stocks or on the E-mini market if you like. But remember, in order to trade a full-fledged strategy, you have to have some type of high probability entry points. You have to have some type of really money management stop placement points, and you have to have some really nice exit targets or exit different, and we teach you all this in the course. So it's difficult to come up with all these yourself. I've accumulated all this information in 37 years. It would be much easier for me to teach you all the things that I've learned than for you to try and figure them out. It's so much more easier, and then you can decide for yourself what you like, and you would learn all this in a matter of weeks as opposed to taking years. So try to really lessen your learning curve so that you don't have to be around for that long until you finally get on board to being consistent. So to answer your question, once again, yes, these can work on any market, any time frame, and they can be applied intraday as well. Let me see. Bob asks, can you hint which indicator? No, Bob, I'm sorry. Bob, trust me, if you had paid $1,400 for these strategies, you wouldn't want me to giving away the rules for free to people. So it's not something that we want to share. But if you become a member of the course, you'll be privy to all of this information along with all the information I can share with you as well to get you on board. Tom says, thanks, this makes sense, don't want to get overcomplicated. Yeah, Tom, my mentors said probably one of the most important things to me ever when I was first trading. This was in the 90s, and they said, Steve, it's the easiest thing in the world to complicate your trading. Anyone can do that. If you're trading 2 weeks or 20 years, anyone can overcomplicate your trading. But it's the most difficult thing in the world to simplify. And that's what I started to do. I started to cut away and release all the things I had been taught that I was supposed to be using, such as news, such as volume, such as all these indicators, and I just let go of them all, and that's what got me on the road to consistency. Now, I'm not going to sit here and promise you that you're going to be a multimillionaire in a year if you keep your trading simple. That's not what we're about. What we only try to instill in people is consistency, because consistency equals longevity, and longevity is really what success is all about. There are 1,000,001 traders who have made a killing and then lost it all. But it's the traders who have been trading 10, 20, 30 years down the road that are still in the game, and that's what success really is. So that's what we try and instill in all of you, just longevity, which comes through consistency. Okay? Peter asks if this is being recorded. Yes, once again, if you go to the, you call up the number provided below, or else just simply email the address there at Pro Trader Strategies. They will send you the link to the recording. Andre asks, Stephen, do you have clients in South Africa trading our markets with this strategies? Yes, actually we do. As you can see here, we have South African members. We have members in over 50 countries. And one of the things that we say to all these people that are members, we say, listen, once you become a member of Specialist Trading, we give you all the rules, all the different details, and my personal mentoring. And we do the same thing whether you've been trading for 2 weeks or whether you're a hedge fund trader who's been trading for 30 years. So we don't change and alter things due to your experience. These are the same rules that I use using these strategies that someone who is new to trading uses. Okay, you're going to use the exact same basic format, and then we'll just alter it to fit your needs. If you want to be more conservative, if you like to trade a certain time frame, we work with you on that. But there's no difference in terms of how long you've been trading. So don't feel that I've only been trading a short time, this is too sophisticated for me. Someone who's been trading 50 years is looking at the same rules as someone who's been trading a week or two. Okay? And as I stated, that's why our strategies are traded in over 50 countries around the world. Okay, if there are no further questions, remember once again, if you want to get on that road to consistency, I really strongly urge you to take advantage of this discount. This would normally cost you for these two great strategies. They're really inexpensive, in my opinion, already at $1,400, but we've reduced them down another $400 down to $995. Okay, this is for a limited time only. But please remember that we have payment plans that will work with you. So if you're interested in having some type of plan where you don't have to pay the whole price altogether, you can pay monthly or even weekly if you like, we can work with you and just contact any one of our trading consultants and they'll be able to do that. One last question. Bob asked if we purchase, which strategy is best for Forex? Well, they're both. You saw the statistics. It's up to you. One generated, roughly 48% this past year. One generated 45% this past year. So it's really up to you. It's more of a subjective call. In other words, do you want to trade one that trades candlesticks? Or you want to trade one that trades off an indicator? And they're very simple, as he stated. They're not intense at all. So I think the best thing is to have both. And you can have, when one is not generating a signal, most times the other one will be. So you're getting basically two for almost the price of one, along with 37 years of experience. So Bob, they're both great. As you saw the real world statistics, if you were trading a hypothetical $50,000 account, well, you now have in 1 year over 22,000 trading each one. So once again, past performance is not indicative of future results, but these are real world results that we're sharing with you. Okay, so I don't I can't promise to tell you that one is better than the other. All I can say is that they're very consistent. Okay, that's all we're trying to work with, just consistency. I know so many people buy things, the minute they buy them, they don't work anymore, or the minute they buy them, they just can't understand the rules. It's just too complicated. It's not like that. Okay. Jill asks, for strategy number 5, do you take also combined bars as a signal? I mean, the bullish engulfing occurs in 2 successive bars, that when you combine them, you get an engulfing bar. We can do that, but that's something that's more in our mentoring, and I just don't want to go there. That wouldn't go against the rules, that's all I'm telling you. But that's not part of the basic rules. That's just more of an alternate way of trading it, and it has a little bit more subjective, entry points to it. I would just have to work with you on that. That's more of a mentoring type of. But just to tell you, Gil, that wouldn't go against the basic format. Okay, so many times people will ask me questions of Steve, what if I added this indicator? No, if you did that, you'd be going against the philosophy, and I tell them we don't do that. But it wouldn't be in any way against the standard use of this. Okay, we just have to go a little bit more in detail, which we don't have the time or the mentorship to go in that at this point. Remember, if you're serious about taking your trading to the next level, I really suggest take advantage of this discounted price. It's only going to be for a short time. Remember, we have payment plans. You can contact our trading consultants, and they'll work with you to meet your needs. Okay? I want to thank you so much for joining us today. We have a great presentation. We gave you some great information. If you have any more questions, contact us at this email or call us directly. And I look forward to all of you becoming members of our Specialist Trading Forex courses. Thank you so much. We'll see you next time. Bye-bye.